Alibaba is the best opportunity for 2025, or maybe not. In this video, I will explain to you, if you are interested in Alibaba, I will explain the situation, what it does it feel to be an Alibaba shareholder, because I have been an Alibaba shareholder since 2018. If you don't know where the stock was in 2018, it was around 200. Let me share with you here. So I bought the stock here and I liked the ride and I suffered greatly buying Alibaba. So I've seen a lot of stuff about the stock, about the company. And if you are hesitating right now whether Alibaba is the play of the century, if you are, it's a good buy for 2025, please listen to the next minute, watch this video, because it will be filled with good information, because it's a different story when you are out of the business and when you are in the business, when you own the stock. My name is Christophe Nour. I've been investing in Alibaba since 2018 and in the stock market for almost a decade, and I have achieved a performance of 25%, not thanks to Alibaba. Now, here is the story. I hear a lot of people on Twitter, on YouTube, saying that 2025 will be the year of China. You have some picks from investing journals, newspapers. They talk about China. You have a lot of super investors that are invested in Alibaba. And let me show proof of what I mean. If you go to Data Roma, you see that some big investors are invested in Alibaba. You have David Taper, you have Guy Spear here, you have Francis Xu, you had Charlie Munger in the past. That can bring you some conviction. And Howard Marks is investing a little bit of his portfolio in Alibaba, and David Taper is maybe the most advocate person here, and he has Alibaba as his first holding, 15% of his portfolio, PDD 11% of his portfolio, JD.com 5% of the portfolio. He has an ETF, he has Baidu, he's big on China, so maybe there is something to look for Alibaba. For Alibaba, the estimates are very bad at the moment. The share price is in the 80s. The market cap is $200 billion. When you look at the financials, you see that growth completely collapsed, and now the revenue is not growing anymore, so nobody expects anything from the company. For the net income, you see that the company never recovered from 2021. And regarding the balance sheet, you see that the company sits with a lot of cash. They are a net cash. You have $80 billion of cash, $30 billion of debt. So you have net cash of $50 billion compared to market cap of $200 billion. You see a lot of value here. What is happening? You have a lot of the market cap is in cash, and they produce some strong free cash flow. Look at the free cash flow generation. Here it's $20 billion of free cash flow. So they can use this free cash flow to either reinvest in the business or do an acquisition or do some buybacks. They chose to reinvest in the business and do some buybacks. So since 2022, the company started their buyback program. This is not very common for a Chinese company, but seems like the government is paving the way on new buyback procedures, programs for shareholders. So this is quite new for an Asian country. But yeah, they will buy back 5% of their shares, and every day they buy back 1% of the ADR volume, 2%. So that's fine. If you look at the return on invested capital, that is a complete mess, because this has become a behemoth, a big octopus, a big company, and they don't have a lot of margins. If you look at the margins, the gross margins are 40%, net margins it is circa 10%, free cash flow margin circa 10%. Alibaba is a big company. They own many different business segments. You have some logistics, you have Taobao, you have Tmall, you have the cloud. They are a little bit everywhere in China, and they use some of their free cash flow to reinvest in these businesses. So now I hear some people on Twitter, on YouTube, they say that all the investments that Alibaba made in 2024 will pay off in 2025 and 2026. And all the arguments I read on Twitter right now, I have read them for the beginning of 2024, for the beginning of 2023, for the beginning of 2022. This is the same scenario happening over and over again, and people are optimistic because these stocks are cheap. I agree with you. The stock is cheap. Forward P ratio of 8, of 9. Price to free cash flow of 10. That is cheap. That is cheap for a reason. People don't think that the Chinese economy will rebound. And I'm very surprised that even after announcing a big stimulus in China with more than $1 trillion of stimulus, a bazooka stimulus, incentive to buy more shares, David Tepper coming to CNBC saying buy everything in China. Even after this big stimulus, stocks have completely collapsed. If you look at the retail sales in China, they missed. Inflation is not here. You have deflation. People are not buying. All the wealth in China was tied to real estate, and the price of real estate, the housing prices crashed 80%. So people were completely wiped out and scared, and people in China don't consume anymore. They are scared, fearful. They don't plan. You see all this LVMH, Louis Vuitton bag, the luxury goods. It seems like the Chinese economy is fearful at the moment, and everything collapsed since COVID and their zero COVID policy. It seems like the government is struggling to revive, to restore their great economy. So it may take 1 year, 2 years, 5 years, 10 years, you never know. But it seems like for the past 4 years, since 2020, everything went downtrend. Everything is bad in China. So if you invest in Chinese companies, you expect the country to rebound. Are you smart enough to anticipate these kind of moves? Are you smart enough to guesstimate a macro trend for a whole country? If experts can't do it, can you do it? That's the first constraint I would see. I am a Chinese bull. I love China. This is wonderful what they have done. But for the moment, I would be very pessimistic for 2025 rebound, because I hear the argument of renovation, they will come back to a reality, but I'm telling you the same things that you are reading right now online. We've heard this story before, for this year 2024, but also 2023 and 2022. We have heard the same story again, and I would not be surprised if Alibaba stock went nowhere for 2025. By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of the video. Okay, now let's talk about the company specific issue. Jack Ma was removed from the company. You have another CEO, chairman, Joe Tsai, the co-founder. People are still here, and you have wonderful CEOs for the company. But it seems like this company is struggling and is continuing to struggle. They said when the stock was completely crashing that they had different divisions, different business segments, and they wanted to separate the business segment, to do spin-offs of different segments, because it would create shareholder value for the long term. It was a complete fail. They failed to raise money, to raise capital. The spin-offs completely failed. We were waiting for a banking arm of Alibaba, complete fail. The IPO was delayed, and it's a complete fail. They created zero value for shareholders. And now, a few weeks ago, we read that they plan to do bundles of their different segments. Because the spin-offs failed, they want to gather things around once again, because it will create shareholder value. I don't buy it anymore. I have been there, seen this, been there before, since 2018, when the management says something is very unlikely to be true. This is a struggling company. This is not the fault of the management, it's just that this is a retail company. Competition is very fierce. In 2014, the market share of Alibaba was huge. Now we are 10 years after this, to 2024. The market share of Alibaba collapsed completely because competition is very fierce. You have PDD, you have Tencent that is coming for you, you have JD.com, and even in the software cloud part, in 2022 they invested a lot in in software. In 2023 they invested a lot in software. So everybody on Twitter said, oh yeah, for 2024 they will collect their investment in the cloud and it will produce nice margins. You know what? It completely failed in 2024 because nobody wanted their cloud, and now you have Tencent cloud, you have competition. So Alibaba had to cut their revenue, cut their prices to get more customers. They are aggressive to remain the leader when it comes to market share. So they have to reduce their margins. They are they became less competitive as a point of view of an investor, but to become more competitive and keep their market share, they have to reduce their prices. If they reduce their prices to compete with Tencent Cloud, they will reduce revenue. So it's not profitable. And the cloud segment is struggling. Not only do we not see great growth for the cloud, but there are newcomers in this cloud industry. So now you compete with Tencent, but you will soon compete with other players in the cloud industry. And it is very likely that Alibaba will keep struggling. This is a very competitive environment, and if you cut your prices, you cut your margins, and you produce zero earnings per share. No growth whatsoever. So, okay. That was for the reinvestment part. I don't buy it anymore. Alibaba will keep reinvesting some of their free cash flow into the business, but it doesn't mean that it will produce any earnings. Same thing for the logistics, Taobao, Tmall, the Singles Day. You have the November, every 11th of November, you have the Singles Day in China, and you get more sales during this day. So you can say traffic is getting better and better and better. They do more sales. The merchandise value is growing year after year, but still you have no rebound of net income. You have more traffic, but they had to reduce their margins to stay competitive, because you see a lot of competition from PDD. You have Temu. This is very aggressive. PDD is the fastest growing business in China to reach $1 billion of market cap. You have some great competition. Same thing with JD.com. You have some great competition. So Alibaba is here struggling, throwing things to the wall, and struggling. I watched almost all the interviews from the CEO chairman. Basically, they say that this is a very difficult business. They are sorry they didn't see the changes for shareholders, but they are aware of these problems and will manage them. Yeah, we've been hearing this for years, so I'm not very confident in their future. So no growth. I expect no growth for revenue, net income. They will continue to struggle. How I see the situation is, for every segment Alibaba has, they are struggling. They are not the leader by far. They don't have a moat, competitive advantage. That is very clear to me. It seems like they are struggling on every side of their business, and every time they want to do something to reward shareholders, create shareholder value, it completely failed, because China is a very capitalistic country in some sense. If you are the leader in 2014, it's not sure at all that you will be the clear leader 10 years after this. Competition comes for you. That is very fierce, and competition is hungry. They will take their market share in a few years, and if you don't wake up, you will lose all your market share, you will lose your growth, and you are not a darling anymore. So I'm looking forward to seeing what 2025 will be for Alibaba, but I don't expect anything. I just expect what the financials do right now. In other words, some buybacks, no growth, and some cash. And I hope they do more buybacks. I hope more of the cash will go into buybacks. I don't expect efficiency. I don't expect cloud growth. I don't expect major value creation through acquisitions or spin-offs. And they do a small dividend of 2%. So basically, if you look at the trailing 12 months for the business, what is the buyback yield on this one? The buyback yield is 5%. Why is it not working? Anyway, let's say you have 5% buyback yield, okay? 2% dividend yield, so that's a 7% shareholder yield. You add this to a P ratio of 10, and you get a value case. Either it's a value trap, and it will stay at this level for years and years, or it's a beautiful value play, and it's a big bet on China, basically. If you don't have a stimulus, a bazooka stimulus that revives the Chinese economy, it has a great chance of staying at these low levels. And if we have a scenario where China wakes up, consumption is coming back to reality, the real estate prices go up again, and China is growing nicely again with some inflation, in this case, that will be beautiful for China. No, I'm not talking about Alibaba in a particular way, because you still have competition, you still have to struggle in the cloud business, for example. But for Chinese investors as a whole, that may be great. For Alibaba, be cautious before you buy Alibaba. And you may say that I hate Alibaba. It's not that I hate Alibaba. I still own 3% of my portfolio. That is Alibaba. So I own some shares and I follow it closely. I'm telling you that expect suffering. Expect to suffer because this company is struggling. Be careful of what you hear, what you see on YouTube, on Twitter, because I follow the same guys you follow. I read everything about Alibaba. I watch every YouTube video, so I know how painful it is to buy with a lot of hope and then be disappointed and disappointed again and again and again. And I have been disappointed for many years. So I'm telling you, expect more suffering. And maybe after watching this video, you may think that it's not worth it. Maybe it's not worth the stress. Maybe you can buy Google or Apple or Amazon, or I don't know, do something else with your money. You will have less stress. But I'm telling you, for the past 10 years, investing in China has been very disappointing for a lot of people. And I'm not the only one doing this. If you look at all the super investors on Dataroma, they have a lot of them have a negative view when it comes to China. Because at the end of the day, stock prices follow earnings per share. If you look at the index, the Hang Seng index in China, and you look at the earnings per share for the index, it went nowhere for the past 10 years. You compare this with the S&P 500, the S&P 500 is going up, but the earnings per share are going up. So you have some correlation that goes up. For the Hang Seng index in China, you see nothing, stable. So it's normal to have a stable index over time. And if you had invested in the Hang Seng saying it will rebound, or I believe in China, no results for 20 years. The GDP per capita for China is very nice, growing nicely. But the Hang Seng index, the Chinese index, is going nowhere. That's very strange. That's a very strange situation, but China is a strange country. I mean, that's a phenomenal what they have done. The GDP per capita is growing nicely, but the earnings per share are stable over 20 years because of fierce competition, because of government intervention, because of companies, what they do. The earnings per share can't go up. So be very cautious and don't be a bag holder. In other words, if you still want to go into Alibaba and buy more Alibaba, be aware of all these risks. You can still be a buyer at this current level because you believe in the thesis. Buyback, I completely understand. Just be aware of all the risks when you invest in China and Alibaba because it's a struggling business. If you like this content, I have an investing coaching program. In this program, you will learn a complete investing process. You will learn how to find good stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, in this coaching program, you will have access to my personalized guidance for long-term results. We will do weekly calls where we analyze stocks together, and you will have access to my private number available 24/7 for full support. If you have any questions, I'm here to help. Click the first link in the description below to get more information. You will get a video, a short video that explains how everything works completely for free. No need for your mail address. Just click the first link in the description and I'll see you on the other side.